Are we getting close to the bottom here? What signs are you looking for?
Hey, Julie, great to see you. Look, I think we are likely getting close. I think value has opened up in the space in a variety of ways. We are seeing stabilization in some of the things that have been driving the market. But crypto really has been weighed on by a shift in macroeconomic expectations, shift in expectations for the U.S. policy outlook. I think a few months ago, we had a booming U.S. economy combined with Fed rate cuts. Now there are questions about the health of the labor market and about credit markets and uncertainty about where Fed rate cuts may be heading. It's really been that macroeconomic shift that's weighed on crypto. The crypto industry itself in very solid shape from a longer term standpoint. I think we'll be through some of this macroeconomic uncertainty relatively soon.
Okay, so I have a lot of questions about this. First of all, New York Fed President John Williams spoke this morning, and he indicated that he would be open to a Federal Reserve rate cut in December. Stocks bounced off of that. Bitcoin bounced a little, but didn't recover. So if indeed Bitcoin has been tracking to these rate cut perceptions, why didn't we see more of a positive reaction there?
Look, it's of course bigger than any short-term move. I would say this: you have a jittery crypto market because of concerns around a concept of a 4-year cycle. Crypto was an early stage industry and asset class for the last 15 years, and it appeared anyway to follow a 4-year cyclical pattern. We've had a 3-year bull market, and so investors that were conditioned to that kind of pattern naturally a little skittish around prices today, concerned about some type of broader top. I think that this is a misguided perception. Cycles don't die of old age. Things that are priced in and well known to the market typically don't move prices. I think it's very clear to me that we've seen a shift in the macroeconomic expectations. That's weighed on crypto. The outlook continues to be very bright. I think we'll see that play out through the numbers and ultimately through valuations over the next few months.
So, something else that sort of confuses me about this current moment in crypto is that one of the arguments for crypto as an asset class, Bitcoin as a thing, was that it wasn't subject to these macro forces, right? That it sort of existed alone as this thing that was outside of the financial system. And it seems like as it's gotten more institutionalized, which is something that the industry wanted, that's no longer the case. Is that fair to say?
It is absolutely fair to say, crypto is no longer an isolated ecosystem with zero correlation to things that are happening in the broader economy. It's a $4 trillion sort of mid-size alternatives asset class that's in many different types of investor portfolios, and that's going to continue to grow and evolve and change over time. Now, investors look carefully at these correlation questions, and although there is shared ups and downs and similar macro drivers, similar to other commodity markets like oil, crypto also frequently marches to its own drummer. And so this is what makes a good portfolio diversifier. Yes, there's inescapably some beta to broader equity market moves, to the behavior of Fed policy, just like other commodity markets, for example. But there is also a moderate correlation and good diversification benefits for incorporating crypto in a portfolio. So this is the kind of analysis that everybody that is trying to optimize a diversified portfolio goes through. I think that they're not surprised by these recent moves, given what's been happening in the economy, and it's not going to shake their expectations of how to incorporate crypto in the context of a diversified portfolio for the longer term.
Zach, this year we've seen a real boom in digital asset treasuries, right? Companies putting crypto of all different kinds on their balance sheets. With this sell-off and some of the liquidations, for example, even this morning that we were seeing, the speed of the drop, is some of that because these digital asset treasuries are being forced to do some selling when the cryptocurrency prices fall below a certain level?
I would say no, and that is a increasingly common misperception. By and large, there has been virtually no selling by these vehicles. They may do that, they may not. It'll all depend on what is in the best interest of the shareholders of each of these individual names. But by and large, they have not been selling. Really what you have seen is that these assets traded at a premium at earlier parts of this year when there was excess demand from equity investors for crypto exposures in the context of rapidly rising prices. Now, as prices come down, you see some of these assets trade at a discount to the crypto on their balance sheets, just reflecting less demand from equity investors. These are conventional cyclical ups and downs that are common, in crypto's history and also common in every asset market. And I think investors will come to understand this, and these types of structures will be a permanent feature of crypto markets and the right vehicle for certain types of investors. ETFs, private fund structures will be the right vehicle for other types of investors.
Zach, what's going to turn things around here? I guess one of two things can happen. Either the selling exhausts itself, or something positive happens that actually makes people want to come in. Do you see that type of positive catalyst potentially between now and the end of the year?
I do. Fundamentally, the thing that'll change, I think, is more progress on market structure legislation in the U.S. Senate. This has been a huge piece of the crypto story this year. Regulatory clarity driving institutional investment in the asset class. I think we're going to see the ball move further down the field before the year is out. I think that's one important positive catalyst, potential positive catalyst to consider for the asset class. From a more technical standpoint, I'd suggest investors focus on ETF flows. The ETF has really been an incredibly popular instrument for all asset classes, but it's definitely in crypto. We're delighted to continue to bring these vehicles to market at Grayscale. And I think keeping an eye on ETF flows is a good barometer for some of the shorter-term market sentiment. As we see some of those flows stabilize, that could be confirmation of a bottom. So I would focus on those two factors: progress on regulatory clarity, ETF flows as potential catalysts that investors can monitor into the end of the year.
We will be watching those things indeed, and we'll catch up with you again soon, Zach. Thanks so much.
Thanks, Julie.